I'm honoured to take on this responsibility at a vital time for our country. I will take action this week to deal with energy bills.
The markets are looking very, very closely at political pronouncements, and the UK does face some serious headwinds.
This is Bloomberg Surveillance, Early Edition with Francine Lacqua.
Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Here's what's coming up on today's program. Day one, at number 10, the new Prime Minister, Liz Truss, names her cabinet and pledges action this week on soaring energy bills. Record fix, China signals mounting discomfort with Yuan weakness, setting its reference rate with the strongest bias ever. The yen sell-off accelerates. Plus, bears in control, stocks slide along with commodities as fears of aggressive Fed tightening roil risk sentiment. The dollar hits another all-time high. So this is what the markets are telling us. The picture across the board, of course, one of dollar strength, aggressive monetary tightening from the Fed and other central banks at the forefront of investor worries. We could see another 75 basis point hike from the Fed. S&P futures pretty much flat. It's really Europe that's, taking most of the brunt. If you look at the industry groups, all of them are losing basic resources, down some 2.8%. Then we look at yen, our Mark Cudmore, very interesting thoughts on yen, currently at 143. It's pretty incredible to hear the messaging from officials saying it slid too far too quickly, and yet markets being so on edge that they keep on selling it off. Overall, European stocks, and let's look at the map to see the difference. We heard from, I think, a couple of chief executives. Urchel, the UniCredit chief executive, saying that, look, he's expecting a recession for, I think, Italy and Europe, but he says he doesn't know how much of a recession or how deep the recession will be. Mr. Saving, the chief executive of Deutsche Bank, also coming out with some comments saying it's almost impossible for Germany to avoid a recession. Then, of course, here in the UK, we'll look at pound. There's a testimony of Andrew Bailey and other MPC members, and we'll hear from the cabinet of Liz Truss. She is the new UK Prime Minister. She's appointed Kwasi Kwarteng as Chancellor of the Exchequer. Her day one priorities include a major package of support to tackle the soaring energy crisis in Britain.
I will deal hands-on with the energy crisis caused by Putin's war. I will take action this week to deal with energy bills and to secure our future energy supply.
So let's bring in Bloomberg's Lizzie Burden with the very latest. Lizzie, you were outside number 10 yesterday. Today we're expecting, of course, the cabinet to meet for the first time. What should we expect of them?
Any minute now, we're expecting that cabinet meeting. They filed into number 10 last night. That's when we found out, confirming our expectations, who would be in it. And it is, as expected, a very diverse cabinet. You've got the first black Chancellor, Kwasi Kwarteng, Suella Braverman at Home Secretary, James Cleverly, Foreign Secretary, and Kemi Badenoch, goes into trade. She, of course, had also run for the leadership. So really, Truss showing that she's rewarding loyalty, because loyalty paid for her in the contest against Rishi Sunak, arguably. But it may come back to bite her. The Times has a cabinet minister reported today, an insider, put it that way, saying that she's not going to last 2 years, given that she's keeping her enemies on the back benches.
Lizzie, her new cabinet meets this morning, as we say. What do we already know about what kind of policies they could be putting in place?
Well, we heard some of Truss's priorities in her speech outside Downing Street yesterday. She said the economy, energy, action this week, as you heard there, channeling Winston Churchill, and the National Health Service will be her top priorities. But she's also got to tip her hat to Boris Johnson, because, of course, she's riding his 2019 election mandate. And so she talked about the infrastructure commitments that she's going to uphold. Really, it's levelling up in all but name, but that slogan so associated with Boris Johnson. As you said, the pound really didn't seem to be too impressed by this speech. It was pretty much undisturbed. But you and I spoke to Philip Hammond, the former Chancellor, yesterday, and his message was that the markets are watching at this point. They're really going to need some reassurance after the terrible summer the pound has had on Truss's policies on the Bank of England, tax cuts, Brexit. So we'll hope to hear more from that in the coming weeks.
Lizzie, what does this all mean for BOE officials? So there, some of the officials, including the governor, will be hauled before Parliament's Treasury Committee this morning.
Yeah, any minute now, we're going to see the governor and co in front of the Treasury Select Committee. Be interesting to hear. Well, they're most likely to stand up for BOE independence because, of course, Truss has said that she wants to review the bank's mandate. Also looking out for hints as to what they're going to do in September. Catherine Mann, a BOE policymaker this week, didn't rule out 75 basis points. But because of these energy plans that we're hearing about, they've not yet been confirmed by the Truss team, but leaked documents suggest that they could cost 170 to 200 billion pounds. Bloomberg economics analysis suggests that they would mean inflation has peaked, a recession could be avoided, and that 75 basis points isn't looking so likely in September. So we'll look for clues as to what we're going to get in the next meeting, because of course the BOE has to take account of all the hawkish signals that we've been getting out of the ECB and the Fed.
They certainly do. Lizzie, thanks so much. Lizzie Burden there at Westminster. Now joining us to talk about the markets, the impact, of course, this will have on sterling, but also FTSE, is Anna Stupnicka, a global macroeconomist at Fidelity International, and Christine Aquino from our markets team. So thank you both for joining us. Christine, let's start off with you. I know that there's a lot of focus on dollar, but of course this also impacts, I guess, what we see from the balance of payments and what it means for pound.
Absolutely, Francine. I mean, this is kind of the issue that the pound is having at the moment, right? I mean, we saw that initial positive reaction to Liz Truss's energy plan, both for businesses and consumers. But then that really didn't last long because there is this overwhelming counterforce, which is, of course, dollar strength. And this is the reason why that kind of Truss honeymoon was very short-lived. It really only lasted a day. And, what we heard from investors yesterday as well, digesting through the plan is, this is great at the onset, but we really need more specifics. How is the government going to pay for this? And what is this going to do to the UK's finances at a time when borrowing costs are the highest that they've been in years?
Anna, are you bullish on UK right now?
I think it's fair to say that we might be turning incrementally a little bit more positive because the numbers that have been floated so far look big. This is a COVID-style response to the crisis. But as you say, it's really all about the composition of that package and how it's funded, whether it's going to prove inflationary. And then, of course, that will have implications for what the BOE is going to do. We do think that the BOE will continue being hawkish for the time being, at least trying to front load those hikes a bit further, partly to support the pound. So yes, some positives potentially on the horizon, but we need to see the composition and the implications.
Yeah. So Anna, what is the right way to fund this? I don't know whether the markets in general have a preferred way if Liz Truss is going to continue with her tax cuts.
Well, I think from our perspective, making consumer pay for it later over the course of many years is probably the right way to fund it. So this is going to be support now at the time of the crisis, but then consumers will have to pay for it later. That will not have implications, obviously, on debt, so no more debt. Because if you do this in an unfunded way and borrow more, this might have implications on the curve, serious implications on the curve, kind of an EM-style situation, which could be quite risky, I think, for the UK.
Christine, when you look at stocks, and this is, if you're a FTSE 100 trader, it's very different if you're a FTSE 250, but how will this all pan out?
Well, yeah, it's very interesting, right, Francine? I mean, of course, the FTSE 100 benefiting a little bit from that weaker pound story. And again, also getting that energy fill-up from the energy crisis that we're dealing with. But then if you're a very domestically focused company, really your focus is going to be on the state of the consumer, which we know is not great at the moment. But it was quite notable that FTSE 250 was outperforming yesterday, again, in reaction to this energy plan. And that really tells you how much it depends on the state of the domestic economy moving forward. And so the performance of those stocks very much kind of dependent on whether this energy plan really will ease that burden for consumers, especially during the winter time.
Yeah, and Anna, this goes back. I mean, we have a great story actually on some of the foreign buyers trying to scoop up some of, the healthcare stocks because of the attractiveness of the UK, especially if you have lower sterling. Where do you see this economy going in 4 or 5 years? Again, I know there are a lot of questions about what Liz Truss wants it to be, but there are questions about the Northern Ireland Protocol and so on.
Well, I think that's very complicated. Overall, I think from a macro perspective, we need to see high productivity. We need to see transition towards greener energy and all the investment in infrastructure, potential leveling up or continuation of that. And really, it is all about productivity, and I think that will shape the path for growth overall and for markets over the next few years. So really, attention is on that.
Great. Thank you both for joining us. Christina Kino there from our markets team, staying with us as well. Anna Stupnicka, global macroeconomist at Fidelity International. Coming up, China's export growth slows more than expected amid weakening global demand and COVID lockdown, while Beijing makes a strong Yuan intervention. Well, we'll have plenty more on that shortly. This is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, China's exports growth slowed more than expected in August. That's as global demand weakened and COVID lockdowns disrupted manufacturing production. Now, continuing lockdowns and staggering growth weighed down domestic demand and import growth. Meanwhile, Beijing has made a push to curb the yuan's weakness by fixing the currency at its strongest bias on record. Well, still with us, Anna Stupnicka, a global macroeconomist at Fidelity International, and Christina Kino from our MLive team. So thank you both for joining us. Anna, how worried are you about the Chinese economy right now?
I think we have seen this story through the year. We thought that maybe we could get a growth rebound in the second half of the year, but the government is sticking to the COVID restrictions. So I think this is just another shock hitting the global economy. And of course, from the China perspective, it's not surprising that growth is so weak because there is no consumption engine to drive growth. And also you have the slowdown in the rest of the world. And so you cannot grow just based on your exports. Again, I think it's a balance. We don't want to see the unraveling of the property sector, for example, and serious financial instability. But at the same time, we are likely to see big stimulus there as well. So I think this growth is likely to remain slow until something turns. So either the pickup in the rest of the world or potentially removal of the COVID restrictions, and then the economy can start going again.
Yeah, and Christine, what does that mean for renminbi?
Well, the yuan is really struggling, and it is struggling to the extent that it is now something that authorities are really pushing back against in a big way, right? It really has been a while since we've seen this consistent pushback against a weaker yuan with a stronger fixing for several sessions now. And, that really tells you a lot about the Chinese authorities' tolerance for just how weak they're going to let the currency go, but also how they're thinking about managing the economy as a whole, because it's not just the yuan policy. That's one side of monetary policy that they're using as a lever. The other side, of course, is the support that we've heard about, and the central bank just providing more support for the economy, which is quite a turn from the deleveraging buzzword that we've seen out of China toward the end of last year, early of this year. But I think, it's really this kind of demand destruction as a result of these COVID lockdowns are taking precedence over everything else.
100%. And actually, I'm getting quite a lot of questions from viewers and saying, look, what does this mean for the animal spirits even longer term? Anna, do you see a reversal of some of those policies?
COVID-specific policies?
Yes, in China.
Well, I think it's likely. We've been trying to predict the timing, but it's really impossible. Some experts are saying it might happen after the important meeting, I think, which is now on the 16th of October. So we'll be looking to that. But I think this is really the key to unlocking that growth rebound from here.
Yeah, and Christine, what does this all mean for the rest of the emerging markets?
Not great things. I mean, because it is really getting caught in between a rock and a hard place, essentially. It is the dollar strength on the one hand, which is very much squeezing the economies of a lot of emerging markets. And then on the other hand, the world's second largest economy really in dire straits. And a lot of these economies in emerging markets very much levered to strength in China and the domestic strength there. And so if that has taken away, and then on the other hand, we have dollar strength, it really is quite a tough time for a lot of emerging markets at this point.
All right, thank you both for joining us. Anna Stupnitska, there, global macroeconomist at Fidelity International, and our Christina Aquino from our markets team. Now let's get straight to the Bloomberg First Word News. Here's Danny Berger. Hi, Danny.
Hi, Francine. Here in the UK, new Prime Minister Liz Truss has announced who she'll fill the top job in her cabinet. And for the first time ever, the so-called four great offices of state aren't held by white men. Kwasi Kwarteng is Britain's first black chancellor of the Exchequer. James Cleverly is foreign secretary, and Suella Braverman is home secretary. The U.S. says Russia is turning to North Korea for weapons to use against its war against Ukraine. Officials say Russia wants to buy millions of rockets and artillery shells from the impoverished nation. The State Department says it's the latest sign that Russia is continuing to suffer from severe supply shortages, due in part to export controls and sanctions. The latest on former President Donald Trump's legal woes, and the Washington Post is reporting that material on the nuclear capabilities of a foreign government were found by the FBI at Mar-a-Lago. It says some of the documents were so top secret that even senior national security officials are kept in the dark about them. And a new poll by Gallup says about half of U.S. workers could be described as quiet quitters. That means they fulfill their job descriptions but are psychologically detached from their work. The study found that the share of people actively engaged with their work was 32%. Those who were disengaged rose to 18%. A big drop in engagement has come from Gen Z and younger millennials. Global News 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Francine.
Daniel, I still have so many questions about quiet quitting. I mean, does it mean not putting in a double shift?
I don't get it. I feel like it's just not working extra, which to me seems like doing your job. So I don't know. I don't really understand, Francine.
I know. We'll go on TikTok and maybe discuss this further because we're, Gen Z. Thank you so much. Our Danny Burr there with the very latest news. Now, coming up, Bitcoin continues to struggle, but Pantera Capital's chief executive officer says the digital currency is on to the next leg of a rally. We get that interview later, and this is Bloomberg.
I think blockchain can easily decouple from this kind of risk on, risk off mentality that people have had. And in a year's time, even if the main markets are struggling, bonds, real estate, equities, I can see crypto, marching to its own drummer and hitting all-time highs.
We have seen big leverage in terms of, the open interest in the perpetual swap contracts compared to the amount of Bitcoin out there. It looks like the market's preparing for a lift. What do you see in terms of the price?
Oh, I agree. We've been doing this for 10 years and we've been through three big bear market cycles. And on average, they lasted 220 days. And that's basically what we just had. So I actually think we hit the lows in June that we'll see. And then we're on to the next bull market. And hey, it might be rocky and might take a while to get going. But I think that we're on to the next leg of a rally.
And where will that bring us to, Dan? What's your target for year end and then 5 years out?
Well, yeah, Bitcoin as a proxy for our industry has averaged 2.5x a year for 11 years. So that's always kind of my standard forecast, is that it'll probably keep going at that same growth rate for a while. But it is really important to remember Bitcoin's no longer everything. There was a time Bitcoin was 100% of the market. And then for a while, Bitcoin and Ethereum were essentially everything. Now there are many, many really important projects. And you've seen Bitcoin, rally a bit, but the real story is projects other than Bitcoin and Ethereum are rallying more.
Well, let's talk about Ethereum, because as Matt and I both mentioned already, we're getting closer and closer to the merge. It seems like there is a lot of hype, a lot of optimism. What is your read on the actual impact it will have?
Yeah, it's been our belief that as soon as they actually set a date for the merge, then Ethereum would outperform, and that's actually happened. And I think once we get through next week and it goes through, and God willing, it does work, it should explode. And so we've been, much more excited about Ethereum in the last month or two than Bitcoin. And you've seen Bitcoin share of the market has drifted down to 38%, and Ethereum's now worth a bit more than half the total market cap of Bitcoin.
Dan, love to get your take on state.
The Pantera Capital Chief Executive Officer there and Co-Chief Investment Officer Dan Moorhead. Coming up, Germany headed for a recession on the back of soaring energy prices. That's according to the Deutsche Bank Chief Executive Christian Sewing. We discuss that next. This is Bloomberg. Day one at number 10, the new Prime Minister Liz Truss names her cabinet and pledges action this week on soaring energy bills. Record fix, China signals mounting discomfort with Yuan weakness, setting its reference rate with the strongest bias ever. The yen sell-off accelerates. Plus, bears in control, stocks slide along with commodities as fears of aggressive Fed tightening roil risk sentiment. The dollar hits another all-time high. Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Straight to what we're seeing from industries across the board, sectors all under pressure. If you look at the 19 groups that make up the Stock 600, they're all down. The picture is one of concern, not necessarily because of recession, but of course because of inflation and the fact that dollar is ever higher. So stocks and commodities dropping. The prospect of aggressive Federal Reserve monetary tightening lifted the dollar to another record. That was stoked, of course, by higher Treasury yields and worries about the economic outlook. And that's rippling across the world, leading to tighter financial conditions that could further undermine risk assets. Now, traders beginning to doubt that the European Central Bank will deliver its biggest rate hike in more than 20 years this week, amid mounting concerns about the health of the region's economy. Speaking today in Frankfurt, the Deutsche Bank Chief Executive Christian Sewing said that Germany is headed for a recession. Well, joining us now is Michael Marsh. He is partner and co-head of global credit finance at Goldman Sachs. Michael, thank you so much for joining us. So what are you seeing from what clients are telling you? Are they worried about the next 12 months?
Morning, Francine. Thanks for having me. I think it depends on your vantage point. So if you're a global corporate with access to people, energy, a diversified business, then you're certainly concerned, but I think you feel very differently than if you're domestic manufacturer, for example, in Europe, relying on highly disrupted energy supply. You asked me what are on our clients' minds. I think we saw a few weeks ago some belief that the Fed could potentially be a little bit more dovish in its approach, and so a potential pivot on a go-forward basis, and some green shoots coming through, looking at certain CPI reports that meant people were getting perhaps more comfortable that a recession could be avoided. I think in the last few weeks that's changed. Certainly the Fed's approach or its commentary coming out of Jackson Hole gave people much more certainty that the Fed wasn't having this potential dovish pivot, and a little bit more of concern given the action in the energy markets that a recession could be more near term. So look, real mix of emotions and attitudes.
Yeah. So what does this mean for finance overall? I know if we're going into a higher interest rate environment, we certainly are, then that's a good thing. I don't know whether it translates into more IPOs and what that means for credit finance.
Look at the credit market specifically. I think there are two factors the credit markets focus on incessantly, one of which is a risk-free rate. So are rates steady? Are they moving? It feels that we're getting closer to a position where rates will be in more range bound, and that'll be a good thing. We'll start to see investors then feeling they can price risk? And secondly, how about recessionary pressures? Recessionary pressures put an increase or put pressure on default rates. And that, of course, is pretty bad for fixed income products. So I think if those two levers start to just slow down, or those two elements of volatility slow down, then I think we could see a much more vibrant financing market. The one thing the financing market has for it right now is low issuance. So the demand for cash is down, both in the equity and credit markets, away from investment-grade corporates. I think that lack of supply is giving investors the ability to sit and hold cash and not have to make an investment decision right now.
Michael, what does it feel like sitting in London? So we also have a new prime minister. We're, going to have possibly new regulation. We know that the focus will be on the city of London. What does that mean for you?
Apart from the glorious summer weather, City of London, like a lot of uncertainty. I think, with the change in leadership, it's very disruptive, and so people will take some time to figure out what the new cabinet appointments will mean, policy will mean for the economy. But certainly, right now, looking at today, it feels deeply uncertain. I don't think that's particularly different, though, when I look around the world. Maybe it feels a little bit more comfortable in the US, where their inflation seems to be under a bit of control. But it feels like a bit of a wait and see right now. It's good we've gotten the effectively leadership election through. That shows some stability. I think it'll be interesting to see the next few weeks.
Michael, do you see a lot of clients actually saying they're just going to sit this out? I know we talk about animal spirits. I don't know whether it's appropriate to talk about animal spirits given the crazy inflation and the potential awful downturn that we'll see. But, what will give people confidence?
Again, I think it depends on your vantage point. I think if you're sitting in, let's talk about the alternative space with locked up capital, and you're not necessarily driven by daily mark-to-market pressures, I actually think there's some really interesting opportunities for that world right now, and I think they are looking for bargains, for opportunities to deploy capital. And so I think that part of the investing world is feeling differently to those who are seeing outflows, who perhaps have funds under management that have been under pressure. And so I think it depends on your vantage point. It would be remiss of me not to say that the day-to-day feels pretty uncertain given the recent moves in energy and the continued volatility in rates. But for now, I think it really does depend on your vantage point. It's depending on your attitude.
I know you had a big conference really to talk about this. It was, the Goldman Sachs Investment Bank conference. I believe it was yesterday, Michael. Were you surprised about the pessimism or optimism in the room?
So we had 90 corporates coming through our offices in London and 1,000 investors. What was interesting, when you hear generally speaking, because it was a broad group represented, corporates are actually in pretty good shape. Their leverage level, I would say, is at all-time low. When you track leverage as a financial metric across Europe, it's at decades low. And so I'd say they feel comfortable with the balance sheet risk. And actually spot, when you look at the last quarter and prior quarters of trading, a lot of the noise around supply chain has come down. So corporates, whilst they feel nervous on a go-forward basis and conserving cash, actually felt, I would say, pretty good, surprise on the upside. From an investing standpoint, having come off a few weeks of equity volatility and certainly in credit spread widening, I think that was a bit more of a sanguine mindset. But like anything in life, when you put that group together, it's a real can-do approach. And so what you tended to find was even the more bearish investors were finding areas that they found interesting to invest in. So I would say it was a very constructive feeling, but people were definitely looking forward to seeing how September, October played out at various different levels.
Yeah, and I mean, one of the things that we're trying to figure out is, of course, second round effects, companies going under, Michael, some of the worries because of energy, cost of living, but also increased interest rates. The time frame is uncertain. How long does all of, the second and third round effects of this, how long does it take for it to come through?
So look, a lot of this will be depending on the consumer. So we're talking about a winter season coming through, so the energy bills for a lot of consumers will really be tested. And so that consumer impact feels like it's a Q4, Q1 impact next year. And so I think a lot of corporates are looking at that. From a corporate standpoint, look, as I mentioned, it does feel like a lot of the European corporates are in rude health. They have high cash balances, near-term maturities, balance sheets even in good feather. I think that feels, again, like it's going into next year for clarity on how people feel. And look, from a rate standpoint, I think we're in a much better place than we were at the beginning of the year in terms of where total rates are likely to head or where people feel they are. And for now, it's certainly, it feels like how energy is going to perform, what government action may be taken around the world to try and help or stave off the impacts of high energy prices. And of course, we have a Russia-Ukraine as a conflict ongoing, and that could be a question that remains outstanding for some time.
Michael, thanks so much. Michael Marsh, their partner and co-head of global credit finance at Goldman Sachs. Now, coming up, we speak to Eric Collins, chief executive of ImpactX, on his new book and his 10-step guide to transformative entrepreneurship for underrepresented people. This is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now let's get straight to your Bloomberg Business Flash. Here's Danny Berger. Hi, Danny.
Hi, Francine. Tencent is set to more than double its stake in Ubisoft, buying nearly 50% of the holding company of the founding Guillemot brothers. The move gives the brothers the capital to get the company back on track while retaining control. Governance at Ubisoft will remain unchanged, and Tencent won't have any operational veto rights. Abu Dhabi's sovereign wealth fund Mubadala is said to be nearing a deal to buy Fortress Investment from SoftBank. We're told the deal could value the U.S. asset manager at more than $2 billion. Mubadala has long been a partner for SoftBank. In 2017, it was one of the anchor investors in the First Vision Fund. Bank of America is planning updated return to office policies. That's to formalize some of the new flexibility the bank has given its workers during the pandemic. CEO Brian Moynihan told an industry conference the plans will be based on feedback the company has received from staff surveys, and the rules will be specific to each business unit. Spanish oil and gas giant Repsol is selling a quarter of its exploration and production division for $3.4 billion. It's a dramatic downsizing of its exposure to fossil fuels. The deal with a U.S. private equity firm is Repsol's second divestment in recent months. The oil producer is looking to raise funds to pay for low emissions projects. And that's your Bloomberg Business Flash, Francine.
Danny, thanks so much. Now, it's a complicated time to be a black entrepreneur. Some black founders in recent years have created formidable startups with towering valuations, but there are still shockingly few large VC-backed startups with black leaders, where Eric Collins, founder of ImpactX, argues in his new book that investing in black and underrepresented entrepreneurs in order to create successful businesses is the fastest socioeconomic game changer there is. Well, joining us now is Eric Collins, the Chief Executive Officer of ImpactX. He was also on the committee for a Small Business Administration Council on underserved communities under the Obama administration. Eric, great to speak to you. Thanks so much for coming on. Congratulations on the book. I can't believe we still have to write this in 2022.
Thank you very much for having me, Francine. But yes, in 2022, it is strange. But if you look at the UK, for instance, 1 in 2 black children live below the poverty line. One of the things that we're talking about in this book is if you want to have social justice, you need to have the means to make social justice a priority in every agenda, business agendas, governmental agendas around the world. And business is the fastest way in building large-scale businesses. Because if you think of things like Amazon, you think of things like Tesla, those individuals who started those organizations have an inordinate impact upon policy as well as upon practice in many parts of the world. And we'd like to see some black women, some white women, some people of color involved in those conversations.
So I know there's no quick fix, but is it up to banks right now to just give more lending, to give more support to founders?
It's up to everyone who's an asset allocator, Francine. When you think about it, the way that most of these large-scale businesses that we're talking about, sometimes called the FANG, which is Facebook, Apple, Amazon, et cetera, those companies started through venture funding. So there was a third party who said, we believe, and often an institutional third party that said, we believe in this idea, we believe in this founding team. That does not happen for women and people of color. Great for banks to lend more and for banks to be able to do things, but if banks are relying on the criteria that are associated with we are going to lend based on your income and how many assets you have. In the UK, again, only 30% of black families own their own home. And again, 1 in 2 black children lives in poverty. Where does all this capital come from that allows you, therefore, to get the means in order to be able to start the business?
So what's the right way? And again, if you speak to any chief executive that will come on here from banks, they'll say, well, we have a fund dedicated to minorities trying to start up their businesses. When you look at the numbers, I mean, it's ridiculous. It's hardly there.
Correct. And I think you've said exactly, you get from me a big amen, Francine, that in fact, what we are talking about is very small amounts of capital that are being allocated because somehow this is considered a more risky outcome, that you won't necessarily be able to get the returns that you would if you're investing in the traditional group, which is young white men. If you think about inefficiencies in the market, which is exactly what we as investors want to think about, in places where we can get an inordinate amount of alpha, those are places where other people don't find and spend their time. They don't find the hidden gems. We know that investing in women, investing in diverse teams, investing in people of color actually delivers a huge amount of alpha. So what these asset allocators need to do is to mandate. They need to say to the fund managers in whom they entrust their money, my pension fund, your pension fund, my insurance policy, your insurance policy. We deserve to have that used to advance communities and conversations, missions and mandates that we think are important.
Are we having those conversations? And if COVID means that some of these initiatives took a backstab, what are we going to see with the cost of living crisis?
Oh, what we saw with COVID, what we see with the cost of living crisis, what we see in the Ukraine and Russia, the attention of the news cycle turns and people find themselves saying, look, there's something that's much more important than this. And this is why we have to build black businesses and women-led businesses where the attention will consistently stay. Asset allocators can be an ally, but allies, they're great allies, they're good allies, and they're poor allies. We have to make sure that they stick with us along the path. And I do believe it really starts with boardrooms at the asset allocators, boardrooms in terms of the banks.
I know, but and I think we talked about this last time you came. Boardrooms is fine, but if you're not the ultimate decision maker, it's representation without any power.
Oh, that's a good point. And I do believe, though, that the mandates that are driven by boards who then review the leaders of organizations, the executive and management team, and set the tone, I think that's important. I also think the C-suite should be occupied by women and people of color. Please, don't hear me saying it's just the board. I want to see that trickle down. I don't believe that we can only use a grassroots approach and go from the bottom up. I think we have to start from the top down also.
Is it changing? So is there any glimmer of hope? I know it feels glacial, but are there pockets where you say, actually, this is really advancing?
Impact X, my organization has seen glimmers of hope. In the insurtech company, in the fintech organizations, we've seen that. We've seen lots of glimmers of hope. What we also are finding is that in terms of diversity initiatives, there are huge advances. If you look at 2010 versus 2022, white women have occupied many more board seats, in some places up to 40%, where they were down at like 10 and 15% 10 years ago. That has not translated to black women and black men and other minorities, but that is a focus. We know that it can be done with the will. It can be done. So it's not as though this is inordinately difficult or something which is alien to our species.
We have a new prime minister here in the UK. We're expecting to find out what her policies will be, what she'll put in place. Are you hopeful that some of that will go to more diverse communities?
I am very hopeful that at number 10, what we can find, as we have seen in the United States, that when you have a new head of state, that new head of state has an opportunity to set a tone. And if that individual decides to set a tone which actually emphasizes some of the issues that are associated with women and people of color, that quite frankly, we can see huge impacts on the economy. In the UK, for instance, 75 billion pounds a year is estimated to be lost by underinvestment in black companies. In the United States, that's 1 trillion pounds a year that are taken away from GDP. That's a solution to a lot of problems by actually investing, getting those numbers up in terms of the black businesses, making them larger scale and able to contribute as they can. And hopefully the new prime minister will see that and make an emphasis black business and black empowerment.
So I think we have the most diverse cabinet in the UK in its history, and we have for the first time a black chancellor. Does that make a difference?
Oh, I think who's in charge symbolically can always make a difference. We want to make sure that those people then follow through on what we hope is their underlying ethos and their values, that they follow their values. And one of those is equitable social justice. So I'm hopeful that what we will see is something a little bit different. I was always very interested in the past administration, how few black people were in the administration, lots of people of color, but few black people, and a number of powerful women. I'd like to see that the table increased in scope and the number of people who are sitting at that table actually increased.
What are you seeing in the U.S.? I mean, the U.S., when you read about it, certainly from here, there's so much division on every kind of politics. Does that make it much more difficult for the money to reach the right people?
The interesting thing about the United States is you have almost a shadow system which is available for black people and women. That has existed since the time of slavery, segregation, and moving on. In the book, We Don't Need Permission, I talk about this actually. So there's been this ability to actually function. Motown is an example. Everyone knows Motown. It's an example of an organization that started to serve a principally black community and then was able to open up and become something that influenced the world. Here in the UK, we don't necessarily have those institutions. We don't necessarily have the numbers which allow us to have a very robust economic system that is for black people, like FUBU, for us, by us. In the United States, I am noticing that there is more and more capital They're organizations like ImpactX. There are hundreds of them in the United States, whereas here in the UK and in Europe, there are very few of us, which means what we do is very important and has an inordinate impact in terms of setting an agenda, setting a target, and then also proving the thesis that you can get fantastic returns when you invest in women and people of color.
Eric, as you know, if you're an investor, or actually if you're a saver and you want to invest your money, what's the right way? If you care about this, if you want to make a difference but you don't know how, what's the best piece of concrete advice you can give?
Such a good piece, such a good question. What I would say, Francine, is that you have a pension. Most people who are watching this, who are small savers, have a pension. Yeah. Make sure that you say to the people with whom you have your pension that I want to make sure that you are backing the things that I back, because they do back other organizations. They are principal investors in fund managers. They're asset allocators. Do that with every asset allocator. Write a note to the chair of the board. Write a note to the CEO. Say to Allison Rose at NatWest, where your money is held, I want to make sure that you have programs that are helping people like me. What are you doing? And hold them to account.
But Eric, the problem is that, again, they can be token. Right, token programs. So do we need a more transparent set of data to understand who's behind it, how much they're investing? How do you measure progress?
Oh, I think that would be sensational if we can wait for the data, but I find often that we hide behind the data. I think the results are the results and are very easily seen. In 2018, 1 in 2 black children in the UK were living below the poverty line, where 1 in 5 of their peers who are white are living below the poverty line. That is a fact. There's no reason to look back at that particular fact. How are we going to solve the problem? We've tried a number of things. We've tried marching, we've tried suing, we've tried begging, we've tried voting. What we need to actually do is start some businesses and then force the issue through the economic channels that we sometimes don't use fully. That's what I'm recommending, and that's what this book recommends.
Eric, thank you so much, as always, for coming on. Eric Collins, their Chief Executive at ImpactX, with a very, very impactful book, How Black Business Can Change Our World. Now, coming up, we'll talk more, of course, about diversity in the UK. Liz Truss also promising a major package of support to tackle soaring energy bills. Economists think Truss's package to rein in soaring prices will have a sweeping impact on the UK economy. More from the new Prime Minister next. This is Bloomberg.
We need to build roads, homes and broadband faster. We need more investment and great jobs in every town and city across our country. We need to reduce the burden on families and help people get on in life. I know that we have what it takes to tackle those challenges. I have a bold plan to grow the economy through tax cuts and reform. I will cut taxes to reward hard work and boost business-led growth and investment. I will drive reform in my mission to get the United Kingdom working, building and growing. I will deal hands-on with the energy crisis caused by Putin's war. I will take action this week to deal with energy bills and to secure our future energy supply.
Liz Truss there promising a major package of support this week to tackle soaring UK energy bills in her first national address as Prime Minister. Well, Bloomberg Surveillance Early Edition continues in the next hour. Matt Miller, Kailey Leinz in New York, and Edwards here in London, and this is Bloomberg.
Panic is one of the biggest risks to investors right now.
We've been a little shocked at how much inertia there's been this year for asset allocation.
Flexible exchange rates are playing their intended role of being shock absorbers.
Right now, the dollar strength is as much a good thing as it is a bad thing.
The simple thing that foreign exchange is signaling right now is that the U.S. economy is faring better than the rest of the world.
This is Bloomberg Surveillance, Early Edition, with Anna Edwards, Matt Miller, and Kailey Leinz.
It's 10 a.m. in London, 5 a.m. in New York, and 5 p.m. in Hong Kong. Our top stories today. A record run for the dollar. One measure of the greenback reaches an all-time high as the bond market bets on aggressive Federal Reserve tightening. Liz Truss takes centre stage. The new British Prime Minister holds her first cabinet meeting with action on soaring energy bills in focus. This hour, Bank of England Governor Andrew Bailey testifies to Parliament. And Apple in the spotlight. It's set to unveil the iPhone 14 lineup, a new slate of smartwatches and new AirPods. Welcome to Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Matt Miller and Kailey Leinz over in New York. And Kailey, the Asian session under pressure, European equity markets and risk assets recovering a little bit of their poise along with US futures, but Asia very focused on the headwinds.
Yeah, absolutely. It was a pretty brutal day for risk assets in Asia overnight. The MSCI Asia Pacific Index as a whole fell more than 1% to its lowest level since May of 2020. And usually that pain in the equity market would be a bigger story, but really it's more about foreign exchange today and the fact that the dollar is stronger against literally every Asian currency, including the Chinese yuan, which is trading right at 6.99, very close to that 7 level. And the PBOC very clearly is getting uncomfortable with that yuan weakness, setting the strongest ever reference rate overnight. Really, they are trying to shore up support for the currency, and yet it is still weaker against the dollar. Part of that may have to do with the weaker export data we got for August out overnight as well. And then the Japanese yen, really the one that takes my attention this morning, at a 144 handle. That is something we have not seen going all the way back until August of 1998, when we know that intervention was required. And we've gotten verbal intervention from Japanese policymakers, and yet no real intervention. And the Bank of Japan still sticking with its yield curve control. In the face of that weaker yen, they still boosted their bond buying overnight, really trying to keep that 25 basis point cap on the 10-year JGB yield, which is just above it now. The question, Matt, is if you continue to see this dollar strength and yen weakness, how long is the BOJ going to be able to keep that up?
Well, they have to until they can't, right? Take a look at the Bloomberg Dollar Index here. I've got it slotted in number 3, but certainly it's the most important asset to be watching because this is the third day in a row where it's reached an all-time high. The Bloomberg Dollar Index is a trade-weighted average against, I think, about 14 other currencies. So it's really broadly measured and shows the incredible strength that we've seen. The S&P futures right now are up a little bit. We've seen a lot of turnarounds lately, and we saw that again yesterday, closing down at the end of the session. The 10-year yield rising to 331.49. And if you look at real yields, we're up at the highest level that we've seen since before the pandemic. So really soaring yields if you take out inflation. Bitcoin right now down about 1%, but that is to be expected. With such a huge climb in the dollar, almost all currencies are down against the greenback. And if you measure Bitcoin in dollars, it's trading right now at 18,800. Anna, what do you see in Europe?
Yeah, we see a slightly better picture than we had a couple of hours ago, Matt, but not a firm footing for European risk assets. European stocks then looking pretty negative, as you can see right here. The CAC and the DAX in particular showing some weakness in France and in Germany. And that hasn't really been changed by the news just breaking in the last few minutes that the euro area second quarter GDP came in on the final reading at 0.8% growth. That was against a previous estimate of 0.6%. So better than expected, but that does not change the headwinds that Europe is facing for the winter, when things could get very cold. Thinking of energy supplies, we're seeing a bit of an uptick in Brent crude right now. Some comments from President Putin in Russia talking about how Russia will not supply, in his words, oil and gas and fuel if we see price caps imposed. That's the headline across the Bloomberg terminal. We'll see what develops from that. But this is Brent crude, 93.24, ticking up a little bit as a result of that. Previously, we saw energy prices moving lower with the broader commodity space. That had been weighing on the London market, certainly, as energy stocks and basic resource stocks came under pressure. Talking of energy, this is the Uniper share price, the energy supplier, so much talked about over in Germany. It's had a bailout, of course, from the German government. Well, now it sees 2 downgrades from 2 analysts, and as a result, the stock goes even further into the red. The UK 2-year yield is interesting. Yesterday, we saw that steepening of the curve as the market was reassessing what it would mean if we saw a near £200 billion injection fiscally into the economy in the shape of caps on some of those energy prices. Well, now the market does seem to have the appetite to buy gilts today, which is an interesting development. Ubisoft Entertainment also in focus, down by 15% today. We've seen Tencent, which is, of course, a big Chinese games maker, and this is a French games maker. Tencent talking about increasing their stake here and possibly leaving the window open. M&A within this sector is a really interesting topic, isn't it, Kailey, after we saw Microsoft and Activision Blizzard very much in focus.
Absolutely. So, Anna, clearly already it's a very busy day, and there is still much more ahead on this Wednesday, including happening right now. Bank of England Governor Andrew Bailey speaking before the UK Parliament Treasury Committee. And later today, Liz Truss, the new Prime Minister, will face Labour leader Keir Starmer in her first PMQs since being appointed. Then Apple is expected to unveil the iPhone 14 and its next slate of smartwatches at a launch event. Alex Webb will bring us the details on that shortly. GameStop will be reporting earnings among other companies today. It'll be interesting to actually get some fundamentals from that meme stock company. And finally, the Fed is releasing its beige book of regional economic activity at 2 p.m. Wall Street time. Plus, throughout the day, we'll be hearing from Fed officials, including Michael Barr, Lael Brainerd, and Loretta Mester, Matt.
Wow, so a lot going on today. But of course, the strong dollar is one of the big headlines that we're watching. Steamrolling Asian currencies, putting the Japanese yen on track for its worst year on record, as Kailey was just highlighting. We spoke with strategist Chris Wood of Jefferies earlier about where he thinks the dollar is headed.
So long as US bond yields are rising, which they are right now, and if the BOJ is trying to maintain this 25 basis point target on the 10-year JGB, the yen's going to keep going down.
Joining us now is Bloomberg's Christine Aquino to talk about the dollar strength and what it means for other assets. Christine, what are you seeing?
Well, Matt, really what we're seeing today is a lot of pain being inflicted upon all the other countries apart from the U.S. dollar, essentially. I mean, that is very much clear what we're seeing both in the Chinese yuan and the Japanese yen. And it really comes at a time when these countries, of course, Japan is a net energy importer, so having a really weak currency, not such a great thing for them, despite that theoretical export windfall. And then, of course, in the case of China, very much speaks to the domestic economic weakness and deterioration that we really have seen over the last few months. And it's really difficult to see then, given that these are, some of the world's biggest economies really struggling in their own right. What will stop the dollar in its tracks? Because this is what it's kind of facing at the moment. It really is standing out as the lone stronghold in the world economy at the moment.
Yeah, absolutely, Christine. So we've got the dollar on the rise still. The yen we talked about, the Chinese currency you talked about in passing there, but let's dwell on that. China setting its yuan fix at the strongest bias on record as losses mount there. Increasingly concern, I suppose, in China about the downward pressure then on the currency.
Absolutely, Anna. And I think it really speaks as well to China's strategy here at the moment, right? Because, of course, one thing when it comes to the currency policy and what they're trying to do there, which is shore up, of course, yuan's strength. But then on the other hand, they have, of course, pledged support for the economy as well, the monetary authority, because we are still seeing continued weakness in the economy as a result of the various lockdowns and just that demand destruction. So really, China's trying to kind of have it both ways here. But then the problem is that how much is it going to take for the authorities? How much more are they going to have to do? Because at the moment, it seems like maybe they're holding down the line. But, it's always once you start deploying that support for the economy, it's kind of a spiral where you're going to have to deploy more support to keep the economy propped up.
Can you have your cake and eat it too? Bloomberg's Christine Aquino, thank you so much. Now, we're also keeping an eye in foreign exchange on the British pound as Bank of England Governor Andrew Bailey and his colleagues are testifying to Parliament today about their economic outlook. Investors are currently betting that the Bank of England will raise rates to 4.5% or more by the middle of next year. Bloomberg's Lizzie Burden joins us now for more from Westminster. Lizzie, what are we expecting to hear from the Treasury Select Committee today?
Well, Kailey, they're going to start speaking any minute now, and it'll be a blockbuster session because now we know Liz Truss is the Prime Minister. So we want to get Bailey and his colleagues' take on Trussonomics, at the heart of which, of course, is her blaming the Bank of England for letting inflation get out of control and wanting to review the BOE's mandate. So you can expect Bailey and his colleagues to staunchly defend the bank's independence. But it'll also be interesting to get their take on her energy plans. Documents seen by Bloomberg suggest she's going to spend 170 to 200 billion pounds on helping consumers and businesses through this energy crisis. Our economists at Bloomberg Economics suggest that means inflation's already peaked and a recession can be avoided. So what does that mean for interest rates? Our economists say that 75 basis points isn't looking likely in September, but Catherine Mann this week said that, well, she didn't rule it out. But then our economists say that if the economy overheats because of these energy plans, then rates could stay higher for longer. So we'll be looking out for lots of hints on the future path for rates.
OK, the future of the Bank of England, the path for rates all in focus. Meanwhile, back to the openly political Lizzie. And we see Liz Truss, of course, putting together her top team. What does the composition of that top team tell us and about her approach from here?
Well, it's been very diverse, this cabinet, and she is, of course, Britain's third female prime minister, and she's not selected a single white male for the top position. She's got a first black chancellor in Britain, Kwasi Kwarteng. Suella Braverman goes to Home Secretary, and James Cleverly is the Foreign Secretary. But what it shows about her is that she's chosen the loyalists. All the enemies are on the back benches. She's not taken heed of LBJ's advice about a tent, but also she hasn't taken advice from Boris Johnson, who learned what happens when you displease the Parliamentary Conservative Party. But perhaps she wants to reward loyalty because it served her so well in the leadership contest against Rishi Sunak, staying close to Boris Johnson till the end.
All right, Lizzie, thanks very much. Bloomberg's Lizzie Burden there reporting from Westminster. Now, Liz Truss spoke with President Biden over the phone yesterday in a conversation that will set the tone for the future working relationship of the two allies that have historically been close but do not always see eye to eye. Anne-Marie Horton, Bloomberg Washington correspondent, joins us from D.C. for more. Anne-Marie?
Well, Matt, the two discuss how they can increase global cooperation on a number of fronts, including China, Iran, things like securing sustainable and affordable energy, which we do know the UK government's going to make a big announcement about this week. The two also discuss, which is something very close to the president, given the fact that he really talks about his Irish-American roots and background, is the fact that they talked about the shared commitment to protecting the gains of the Belfast Good Friday Agreement and the importance of reaching a negotiated agreement with the European Union on the Northern Ireland Protocol. Now, why this is important is because this could show some friction of this quote-unquote special relationship between Washington and London. We know that President Biden was against the UK leaving the EU. We know that Liz Truss was at first anti-Brexit, then became one of its staunchest supporters. And what the worry is, of course, for the president is that there could be any UK government policy that can undermine that agreement. We'll see what happens next in terms of these two leaders. We do know the UK has been really pushing for a free trade agreement. That was supposed to be one of these big pieces of the pie of Brexit that we rarely hear them talk about now. And according to people familiar, we do know that the UK government is trying to set up a meeting with the president when they meet at the UN General Assembly later this month.
All right, Anne-Marie, thanks very much. Anne-Marie Horton there talking to us from Washington, D.C. Now let's turn to corporate news. Apple's biggest event of the year is today. The company is set to unveil the iPhone 14, also a fresh slate of smartwatches and new AirPods. Joining us now for more on what to expect is Alex Webb of Bloomberg Quick Take. So, Alex, what are we expecting? What are the highlights?
Well, the events had the invitation headline far out, and there's a suspicion that might allude to some satellite communications for emergency situations on iPhone. But a lot of this is based on the reporting of our colleague Mark Gurman, and he's expecting 4 new iPhones, 2 Pro versions, 2 standard versions. As you might expect with any new iPhone generation, there'll be faster processors, better cameras, and also a smaller notch. That's the little space at the top of your iPhone display which houses the camera. Perhaps more significantly is the introduction of a new line of Apple Watches, the Apple Watch Pro potentially named. And the reason that's significant is because while Apple controls about 36% of the smartwatch market, it is Garmin that dominates the space above $500. So Apple is really coming after Garmin with a watch that is going to be targeted at people who do a lot of exercise, climbing, cycling, all that sort of thing. And it's expected to be priced close to $1,000.
All right, well, we'll look forward for more from that event. Alex Webb of Bloomberg quick take. Thank you so much. And we'll have more on Apple's event later on this hour with Ramon Llamas, research director with IDC's Devices and Displays team. Meanwhile, another company story we're watching this morning, United Airlines is threatening to suspend service at New York's JFK Airport unless federal regulators review runway use and allow the carrier to increase daily operations. United says the airport's total flight capacity hasn't changed since 2008, despite a widening of runways and other infrastructure improvements, and that it would suspend operations at the end of October without more slots. As for how that's translating into performance for United Airlines shares in early hours this morning, doing nothing. They are literally unchanged, but this is definitely a stock to keep an eye on throughout the day today. Another one to keep an eye on is one moving on the back of an analyst recommendation. Wolf Research upgrading Pinterest to outperform with a $28 price target. That would be about 27% upside from where it closed yesterday. This morning it's trading at $22.71, up the better part of 3%. Plunging to the downside, though, UiPath. This is that application software company. It gave a weaker than expected revenue forecast, citing macro headwinds and, wait for it, FX headwinds as well. So that stronger dollar reading through so much in today's action and for these corporate earnings as well. That is a stock down about 22%, and it seems that everything is coming back to the dollar.
Yeah, absolutely. The strength in the dollar continues to be a major theme then, Kailey. Coming up on the program, we'll talk about that with Konstantin, Veit, PIMCO portfolio manager. We'll discuss that. We'll look ahead to the ECB meeting that is coming fast approaching tomorrow, in fact. Plus, ESG funds are taking off in China, but they closely hew to Beijing's political agenda, sometimes including coal, steel, and even liquor stocks. Read more of today's big take story on Bloomberg.com or on the Bloomberg terminal. This is Bloomberg.
Welcome back to Bloomberg Surveillance. This is the early edition. I'm Matt Miller with Kailey Leinz here in New York and Anna Edwards out of London. I want to issue a Bloomberg Surveillance correct first off. I said earlier that the Bloomberg Dollar Index was a trade-weighted index against 14 currencies. It's actually 10 other currencies against which we measure the dollar, and it's hit an all-time high 3 days in a row. Let's bring in a man who knows about this a lot better than I do. Eddie Vanderwalt joins us, Bloomberg Markets Live editor, with a look at, Eddie, what we're seeing ahead for the dollar after these incredible gains against almost all major currencies. Only the real and the Mexican peso have exceeded it this year to date. What's the outlook?
Yeah, look, I think you know, there's definitely a momentum trade going on in the dollar. The dollar, there's a lot of things going for the dollar. The dollar, you know, the Fed continues to raise rates faster than comparable central banks. The U.S. economy is doing quite well, and then there's this idea that the dollar could be a haven if there is a significant or a further sell-off in equities as we approach a recession. But you know what? I'd also start to wonder when that momentum is going to start running out. And if the dollar turns, that could just start helping with the Goldilocks trade that people have been calling for since Friday's jobs numbers.
Right. Okay. Yes. More Goldilocks would be good, I suppose. Certainly, the UK would like some. Let's think about the strong dollar, taking out the yen, taking out the yuan, taking out the euro to some degree, and the pound. Thinking of the pound, the Bank of England's Hugh Pill saying that the Goldman Sachs call that inflation could get to 22% is plausible. A lot will come down to whether we see a cap on energy prices, though.
Yeah, I think so. You know, I think the problem is if you cap energy prices, you also take the incentive away from people to install cheap, more efficient boilers and put solar panels on their roofs and so on. So you do make it. If you cap energy prices, that's sort of works against you in the long run. But at the same time, you know, the UK economy is going to struggle if and particularly consumers are going to struggle if you don't. So it's a bit, you know, damned if you do and damned if you don't.
Right, okay, and that's what the pound is wrestling with. I suppose you still get a price signal if you cap it high enough, but let's see where that takes us. Eddie, thank you very much for joining us. Bloomberg's Eddie Vanderwalt with us on set here in London. For more market analysis from the whole of the Market Live team, MLIV Go. That is the function to use on your terminal. This is Bloomberg. This is Bloomberg Surveillance Early Edition. Here's what you need to know. A record run for the dollar. One measure of the greenback reaches an all-time high as the bond market bets on aggressive Federal Reserve tightening. Liz Truss takes centre stage. The new British Prime Minister holds her first cabinet meeting this morning with action on soaring energy bills in focus. We are hearing lines just coming out right now from the Bank of England Governor Andrew Bailey as he testifies to Parliament. And Apple in the spotlight. It's set to unveil the iPhone 14 lineup, a new slate of smartwatches and new AirPods. I'm Anna Edwards in London with Matt Miller and Kailey Leinz in New York. We'll certainly be talking tech and talking Apple a little bit later, but in the run-up to the market open in New York, what do you see, Matt?
Yeah, well, we're seeing gains in futures, but they're only slight after we've had 6 losses in the last 7 days. So this market is headed down, but we're seeing a little bit of a reversal in futures 5 hours away from the open. So just 0.1% is the gain here. You see the 10-year yield coming down a little bit to 331.30, but these yields are so high that if you look at them in real terms, that is adding in or taking out inflation, however you like to look at it, we see the highest real yield on the 10-year since 2019, and just really giant jumps across the curve. The Bloomberg Dollar Index is our main focus today, as it's up for a third straight day, well, a third straight record, I should say. We had a record high on the dollar index on Monday, a record high on Tuesday. It was trading in London Monday. Of course, we were closed. And now another record at 13.14. And it's just walloping other currencies, all other currencies in the G10, as well as one that you may not consider a currency, Bitcoin right now at $18,800. And so that's being affected by the strength in the BBDXY as well. Kaylee, what do you see in terms of pre-market movers?
Well, ahead of the opening bell by 4 hours, Matt, because it's 5:30 Eastern and the open is at 9:30 a.m. Eastern time. You are seeing relatively muted action beneath the surface, I must say. That doesn't seem like there's that much conviction out there. Where a little bit of softness is coming through is in stocks tied to commodities, especially as you're seeing some of the metals under pressure today. A lot of that having to do with the stronger dollar story, as well as concern around fear over demand in China. So Freeport-McMoRan down by about 0.5%. Alcoa is down by about 1.6% as well. A little bit more strength is coming on the technology side. Large cap tech may be benefiting from the fact that yields are moving lower today. So Nvidia is up about 0.2%. And ahead of that product launch, the far out product launch that Anna mentioned, looking for more details on that iPhone 14 from Apple. Apple stock is up about 0.4% before the bell.
Kailey, let's have a look at what's going on in European markets there. And you said things look pretty muted in the US, and really Europe is playing catch up with the US story of yesterday. So US markets closing more firmly in the red than the European markets yesterday, and we're sort of catching up there. But we're also reflecting moves in commodity prices. Weaker commodity prices on iron ore, on copper and the like had led to underperformance by energy stocks and by basic resource stocks in the London market. Some of that perhaps turning around a little bit with a bit of recovery in the oil price. Brent crude now up by 0.9% at 93.63. We heard from President Putin in Russia earlier on. He was saying that if we see price caps, then Russia will not supply gas and oil and other fuels. We'll see how that develops. This is the UK 2-year yield. 3.09 is where we trade right now. We're seeing buying of gilts at the 2-year horizon, buying of gilts across the curve, which is interesting as we wait for more details about how the UK government, the new government, plans to support UK households and businesses. And Ubisoft, a little bit of interest in M&A activity here. There had been a lot of interest in M&A activity here, but we heard from Tencent and the extent of the stake that they want to take in this business. And so we see some of that M&A froth perhaps coming out, down by 13.8% today in the share price of this French games maker. M&A in the sector, clearly very topical of late. Let's get back to the UK story. The Bank of England Governor Andrew Bailey and his colleagues are testifying to Parliament today about their economic outlook. Let's get the latest with Bloomberg's Lizzie Burden at Westminster. It's been really difficult. We're looking at live pictures of this testimony taking place then, Lizzie. It's been very difficult, of course, for the Bank of England to prepare forecasts for the UK economy of late because they haven't known what the fiscal picture is going to look like. So they, like us, are waiting for clarity on just how much support will be going to UK households and to businesses. Also very interested to follow the conversation around regulation of the Bank of England.
Indeed, and Bank of England officials always hesitant to comment on fiscal policy, but energy plans were what the MPs went in on. Governor Andrew Bailey said he's glad there is going to be a clear way forward on policy. Chief economist Hugh Pill said he thinks that Liz Truss's energy subsidies will cut inflation. Our economists, of course, are saying that the plans could mean inflation has peaked and a recession could be avoided. Then they were asked about the pound. Andrew Bailey said that the pound has been volatile because of the volatility in energy markets, and he said that some of the pound's weakness against the dollar could actually be attributed to the dollar's strength. And then, as you say, they went on to Trussonomics. Liz Truss, of course, attacking the Bank of England and its remit. Andrew Bailey says that inflation isn't just high because of the money supply, so that the difference between Truss's diagnosis of the inflation problem and the Bank of England's. And as expected, the governor defended the BOE's inflation fighting record and its remit against her attacks.
Lizzie, thank you very much. Lizzie Burden there in Westminster to give us the latest on this testimony by Bank of England officials in Parliament. Joining us now with analysis of market responses to what we've heard from the new administration in the UK, Konstantin Veit joins us, portfolio manager at PIMCO. Konstantin, let me start with the UK story. There have been concern, Deutsche Bank causing ripples earlier on this week, writing about the possibility of a balance of payments crisis in the UK. Would the kindness of strangers be tested? I spoke to a guest from JP Morgan this morning and said he wasn't too worried about that because he thought the UK and also many European economies would have to spend big to support consumers, to support households and businesses. What's your expectation of the pressure that this new spending puts on the UK finances?
Good morning. Yeah, I think the picture is broadly similar across jurisdictions, so I wouldn't necessarily single out the UK. You see that Europe, continental Europe, will be doing probably something similar. So on Friday, you have the EU energy ministers planning in terms of their response to the crisis. So we expect something similar, i.e. more fiscal and more cap on gas or energy, which at the end, as has been mentioned earlier, leads to somewhat benigner picture near term for inflation and somewhat more helpful picture also on the growth side. Whether it will be enough to avoid a recession remains to be seen, but I think the stories or the themes are broadly similar across jurisdictions these days.
Konstantin, as you see these massive stimulus packages start to roll out again, can you have any faith that central banks are going to be able to fight inflation? I mean, it seems if you spend an extra £200 billion and cut taxes, inflation is going to continue to be a problem no matter how many interest rate hikes you get from the BOE.
Yeah, I think it's pretty clear that the measures that have been announced will be helpful when it comes to inflation over the near term. And I think it remains somewhat ambiguous what all these measures will do precisely for inflation over the medium term. And it's conceivable that the Bank of England will probably have to do a little bit more than it currently envisaged to do. But again, I think that's an open question. But
hang on though, Konstantin. If you all of a sudden subsidize everyone's bills, that leaves them with more money to spend on other stuff. Doesn't that drive inflation higher?
I think you have seen already a pretty decent shock to growth in the economies. And it's not that, if we have that package, we are totally out of the woods. I think there's still a large uncertainty around growth from here. Obviously, that the stimulus helps, but it's not entirely clear we will avoid everything, and the consumer will now go out and spend a lot. So there's also a Ricardian angle to it. It could be that consumers know that at some stage, things will reverse also on the fiscal side, so that taps will probably not remain open forever. So again, that's why I'm not particularly worried that this means necessarily by default a lot of inflationary pressures over the medium term.
Okay, so there's the question of how rate hikes are going to impact inflation. There's also a question as to whether rate hikes can actually support currencies like the pound or the euro in the case of the ECB, given the persistent strength of the dollar. Konstantin, does anything stand in the way of that?
I think it's not particularly helpful to try to out-hike each other, for example, when it comes to rate hikes and currencies. I think currencies are obviously relevant for the inflation picture, and the ECB obviously looks at it, also takes it into account in their projections. But I think I would probably look more at it as part of the broader financial conditions. And if you take all the other component of financial conditions in the account, for example, in Europe or continental Europe, then you will clearly see that financial conditions have tightened quite considerably. So I think singling out the currency is probably only part of the picture.
Well, of course, another part of the picture is lower equity prices as well, Konstantin. Globally, we're seeing global stocks on track for 9 days of losses in a row. We heard from Peter Oppenheimer over at Goldman Sachs earlier, essentially saying that we haven't seen a decisive low in stocks yet. So do you agree with that? Is all the bad news already priced in, or is it not priced in enough yet?
I think that's hard to tell. There's a lot of uncertainty out there. Volatility is very high. There's a lot of also uncertainty about where, for example, the terminal rates for the central banks are and how bad it gets on the growth side. So I think it's hard to tell. It's pretty. I think it's reasonably safe to assume that a lot of bad news is priced in, but it's hard to say that this is necessarily peak in terms of bad news. The winter is coming, and we have to see what happens from here. So I think it's too early to either declare victory over the energy crisis and go all into risk. And I think it's also wrong to be too pessimistic on riskier segments of the markets.
Okay, and maybe that's the thought process going through the minds of some at the ECB then, Konstantin, as we work our way towards, yes, winter, but also an ECB meeting tomorrow. You've mentioned it already, but how narrow is the window for hiking, do you think, at the ECB? Some describe it as quite narrow, but I think from your notes, you're suggesting that we'll still see hikes in the early parts of next year.
Yeah, I think inflation pressures remain to the upside, not only over the near term, but also the medium term. And it will be a finely balanced decision between 50 and 75 on Thursday. I don't have a particularly strong view on balance. I think they will probably go for 50. But I think more relevant is what's the destination. And it will be interesting to see tomorrow whether they share any thoughts on this, because so far they haven't commented much on the destination. They talked about normalizing policy, which means going to somewhat neutral territory, which is probably around 1.5% for Europe. But it could be that tomorrow they basically declare for the first time more forcefully that they might have to go restrictive to tackle the inflation dynamic. So this will be interesting to watch as well.
Okay, Konstantin, thank you very much. Konstantin Veit joining us there from PIMCO. Coming up, we'll talk about inflation of a different variety. Will we see a higher price for iPhones? Apple set to unveil its latest iPhone today. We'll speak to Ramon Llamas, who is research director with IDC's Devices and Displays team. That conversation next. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. You're looking live at the principal room. Coming up later today, an interview with Chevron CEO Mike Wirth. That's at 12:30 p.m. in New York, 5:30 p.m. in London. This is Bloomberg. This is Bloomberg Surveillance Early Edition. I'm Kailey Leinz with Matt Miller in New York and Anna Edwards in London. Well, Apple's biggest event of the year is today. The company is set to unveil the iPhone 14 line, a fresh slate of smartwatches, and new AirPods. Joining us now for more is Ramon Llamas, research director with IDC's Devices and Displays team. He covers wearables, augmented and virtual reality, and smartphones. So, Ramon, let's start with the phone, the iPhone 14. Realistically, how different is it going to be? Is there going to be something entirely fundamentally new in this iPhone that is going to make everyone want to pay a lot of money and upgrade it?
Look, the reason why you want to upgrade is if it's your turn in the cycle. If it's been 3 years or more, or your phone is broken or something like that, now's your time to do it. Because from what I'm hearing from the new Apple iPhone 14 is that, you know what, this is going to be mostly a camera play. This is going to be perhaps an 8K video play. But look, we already had the big 5G revolution a couple years ago. That was the big upgrade cycle. So again, if you're looking to just replace it for replacement's sake, you know what, take a look at your phone. Does it still work just fine? Stick with it a little bit longer, okay? Otherwise, you're going to be out $900, $1,000, $1,200 just to make that upgrade possible.
Well, to that point on pricing, Ramon, we've just spent the better part of the last hour talking about inflation that consumers are dealing with, an energy crisis in many areas of the world. People just have bigger bills to pay. Is that going to work against Apple when they are trying to introduce more expensive products?
That's a very real concern for people. And survey after survey, we're seeing a lot of people saying, I'm holding onto my phone a little bit longer. I'm going to try to squeeze, that much more time and that much more value out of our smartphones. But here's the catch, and this is what I think you're going to see Apple do, and this is what you're going to see a lot of its carrier partners do, is that if you have a working Apple iPhone from previous years, would be last year, the year before that, there's going to be some sort of discount that's going to be built into that. That's going to help take some of that pressure off. So suddenly that $900, $1,100, $1,300 iPhone is going to come down to perhaps a couple $100, and that's the kind of savings a lot of people would like to see, saying, hey, look, I got the new iPhone 14 and I didn't have to pay full price. So there's something into that.
It's not all about the watch, Ramon. It's not all about the phone. The watch, which is what I want to talk about, could be improved, right? The heart rate measurement is only intermittent. It doesn't really do recovery and sleep as well as a Whoop or some of the other wearables out there. What do you expect in terms of this new iteration?
Boy, if I could put in my wish list for the Apple Watch, it would have to be battery life. Let's make it past a day or more. But there's two things to look at for Apple for almost every Apple Watch launch. It's the emphasis on health and fitness. And there's only so many new exercises that you could do. So let's take a look at health. And so let's have a deeper analysis about health. It's not so much that we could say, hey, here's how much REM sleep or deep sleep or light sleep you got. It's actually giving that, a proactive or prescriptive device saying, hey, you only got X number of hours of sleep. You got this kind of sleep last night. Here's how you can sleep better. And the other upgrade that I'm hearing about is perhaps a ruggedized or even a larger display Apple Watch. But that's designed for the outdoor enthusiast, somebody who really puts a value on being outdoors, having GPS, having being able to find your way home, and to be able to weather those kinds of outdoor elements for a prolonged amount of time. Because you're hearing a lot of rumors about, hey, this thing is also going to be satellite connected. So that says to me, you know what? Maybe we want to have our Apple Watches a little bit longer, a little bit more outdoors. And it goes back to that earlier comment about we got to have longer battery life. If that doesn't, if that's not there, this is going to be a non-starter for me.
Okay, yeah, and just the not having to recharge everything in your life all the time would be good. What about the video and the quality of the video we're going to get here, Ramon? I seem to remember that last time we saw a new iPhone, there was a lot of focus on the video and the type of video you were able to get from it. So what's new this time?
Here's the thing. If you take a look a lot at what consumers do with their smartphones, surprisingly or not surprisingly, it's taking pictures and taking video. And a lot of us try to be, armchair cinema editors with our own video, whether you're trying to get shots of your kids or if you're at a special event. The big rumor right now, the big story is that, this is going to be 8K worthy. Now, if you're really into that and be able to say, here, I want to have, as crisp and as bright and terrific color on my iPhone, this is also going to do it for you. Okay, so you're going to take a look. They're going to talk about their lenses, and they're going to talk about, how fast they're able to render that stuff. I think the secret sauce is really going to be built into, those, software experiences that they're able to bring in. How easy is it for you, for Joe and Jane Smith on Main Street, USA, to say, okay, I can take a video that I just shot for the past 5 minutes, cut it down to about a 45-second clip or shorter so that you can share it on Instagram or Twitter or anything else that you like, or share it with family members. And so, here's the great thing about Apple being Apple. They just make things so gosh darn easy to do so that you say to yourself, well, that was simple. I'm going to do it again and again and again.
Okay. Ramon, thank you very much. Yeah, we will look for that then. Thanks very much for your thoughts today. Ramon Llamas joining us, Research Director with IDC's Devices and Displays team. Thank you very much for the update. Be sure to stay with Bloomberg for a special edition of Bloomberg Technology live from Apple's iPhone 14 launch event. That's at 5 p.m. in New York, 10 p.m. in London. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. I'm Matt Miller in New York with Anna Edwards in London. Kailey is off to help anchor the surveillance program with John Farrow and Lisa Abramowitz. I just want to point out quickly, Anna, I got a chart from Pete Dioteras a second ago showing that global stocks are down for 9 days in a row. You may say, I don't remember Ferris being sick 9 times, but yeah, it's the biggest losing streak since, well, in 11 years. And I think it's pretty shocking, especially as hedge funds start getting back in the market, stop unwinding stuff and start putting bets on. Danny Berger joins us to talk about what hedge funds are doing right now. Danny?
Yeah, Matt, this is from Morgan Stanley and Goldman data, which looks very similar. It's a story of just this immense buying last week. Goldman's data, I think, was the most in a year, at least this year, of buying from hedge funds. And it's not necessarily that they've all of a sudden decided to become really bullish. It's more just that everything has sold off so much. All of a sudden, there are some pretty interesting looking opportunities. So things are cheaper, so they're buying individual stocks, but just in a sign that they're not necessarily going in guns a-blazing. They're still shorting the overall index.
Yeah, I was going to say, so this appetite, is it being expressed as individual names or is it about bigger strategies?
It definitely is individual names. I mean, there's just so much doom and gloom. I mean, we're still pricing in interest rate cuts next year, so you might imagine there's still some repricing to go. So we're not seeing hedge funds buying the overall index. We're seeing the opposite of that. We're seeing them short it. So it's kind of a hedge to say, okay, maybe this healthcare name, this tech name, that looks good, but I'm still not totally constructive on stocks, so I'm going to short the whole thing as well.
Okay, Danny, thanks very much. Bloomberg's Danny Berger with the latest on those hedge fund trends. We're just getting some more lines. We'll continue to watch the Bank of England's Andrew Bailey as he testifies in Parliament. He and other members of the MPC, the Monetary Policy Committee at the BOE, testifying to lawmakers. He says, and of course, the new Prime Minister, Liz Truss, had been a bit critical of some of the things that the Bank of England has done with inflation running as high as it is. And the Bank of England's Bailey, you see him there, says that Russia, not the Bank of England, that will cause a UK recession.
Looks like he's the only one there.
End up with, of course. There are plenty of others to the right and the left, but
yes, a lot of seating
none behind him. There's a lot of seating. The journos didn't show up, it seems. That is it for the early edition. More surveillance is ahead. This is Bloomberg.
Clarify one thing, because I think Andrew described it nicely in qualitative terms, putting it very starkly.